We're just talking about the FANG Plus index, up 33% so far this year. Also looking at the triple Qs that tracks the NASDAQ 100, up in the pre-market fractionally, but still up in the pre-market. So I'd like your opinion. Is this outperformance of tech? Is this confidence in tech and their businesses and their growth, or is it more just a flight to safety?
I think it's a combination of the two. So I think firstly, you've got a rotation out of the more cyclical areas in the market, and particularly of note over the last couple of weeks, of course, is that banks and financial sector. And so investors are looking to move into tech and away from those more cyclical areas in the market. And I think also it's a reflection of how people positioned themselves last year. Of course, these indices and these companies had demonstrable pullbacks and were offering much more favorable valuations by the October lows last year. And so I think many investors actually positioned themselves for better looking return expectations going forwards, buying into these names in the market lows last year.
You know, I want to talk to you a bit about valuation, including your pick, but we're going to get to that in a moment. But first, I want to talk to you about a note that came out last night from noted market bull Tom Lee. He really touched on this FANG trade. He said, in part, the case for technology FANG Bitcoin has multiple factors, including lower rates, solving inflation problems, and we can now add safety from the financial crisis. Do you agree with this take that basically there's a lot of fundamentals setting up to push this tech trade higher?
I think that when you look at the technology sector, there are many, many very, very high quality companies. And I do agree, because if you look at high quality names like Microsoft, like Alphabet, like Intuit, for example, large constituents of these index, they have very, very good secular growth drivers to those businesses. They've demonstrated over the long term their ability to grow their earnings. And if you look at that compared to, say, a bank, of course, which is been in so much trouble over the last couple of weeks in particular, they have very, very different characteristics. So yes, I do believe that this shift out of these cyclical areas of the market into these high quality technology stocks is in line with what he's saying, yes.
All right, I want to talk about your pick. You just mentioned it, Intuit. Obviously very timely here in the United States, at least. We have our tax day coming up, and Intuit makes the TurboTax software that's seen some pretty steady growth, especially during the pandemic. It does have a bit of a rich valuation, 32 times forward earnings compared to the NASDAQ that's just under 24 times. It's also a consumer-facing stock for a large part of its business. Does that valuation make you concerned at all? And at this point, what is a rich valuation?
I think it was important to position yourself correctly in these names last year when you got the opportunity to buy into them. So if you had a look at the end of 2021, Intuit, for example, was trading on almost 50 times 2 years forward price earnings ratio. So it's exceptionally expensive. But the reality for this name is it did halve last year. And if you look at the company, it's exceptionally high quality. You talked about TurboTax. It's also got QuickBooks. So it's playing into this secular idea of a small accounting software for businesses and online accounting software. It's a very, very high quality company. It's now got net cash on the balance sheet. It's got 30% plus operating margins, and it's shown it's very, very able to consistently grow its earnings over the long term. So yes, it is more expensive than the wider market, but it's offering a much more high quality business in terms of that valuation. But you did have, I think, to buy into it at the right time last year when the valuation was offering more upside, because it was exceptionally expensive at the end of 21.
So, Hannah, I want to push you a bit. When we're talking about stocks that have a valuation over the NASDAQ, what are the qualities that you need to see to make them a good investment?
I think that the most important thing that we're looking at this year is balance sheets. So you're wanting net cash on the balance sheet. And of course, this is the big problem with banks, for example. They are so highly geared, and it's this problem with the cost of debt. So I think if you look at the companies that are doing really well this year, companies like Nvidia, Microsoft, Alphabet have all got net cash on the balance sheet. So I think that's first and foremost the most important thing. I think you're also looking at high barriers to entry, and you're looking at the ability for companies to consistently grow their earnings over the long term. Now, this doesn't have to be at a fast rate, but if you can grow your earnings compounding at 4 to 5% a year, that will vastly outstrip the average business in the global equity market.